What's up, everybody? This is Caesar coming straight from the underground where we're innovating. And why are we innovating? Because we're closest to the problem and stand to benefit significantly from obtaining a solution to that problem. And what's our problem? Trying to validate business models in resource constraint environments. So that way we can get to our point quicker and we can innovate as well. And boy, I got a good one for you. Today, in previous videos, I already went ahead and outlined the importance of the product development and life cycle as a mental model for framing whenever it comes to growth in the market and product decisions down the road. I also introduced the idea of testing as a technical risk over time, where it reduces cost and these different phases where you implement different testing techniques. And today, we're going to go ahead and combine those two and really understand the importance of having this framing in your mind whenever it comes to go to market actions or strategizing your product down the road. So, without further ado, if you haven't hit that subscribe button or that like button, go ahead and do it now and let's get into it. So, in front of you, I have two frameworks that are going to help you make decisions, especially as a first time entrepreneur or early on in your product development strategy, whenever it comes to taking something to market or at that aspect, innovating. So, like I mentioned in previous videos, I went ahead and talked about the product lifecycle, how you can use this as a framework to implement certain strategies and certain trade off decisions as you enter the market. For example, in that inception phase, once you find that growth or find that product market fit, and then you move to that growth phase, implementing the right techniques in order to be able to scale not only that product, but also your market acceptance. So, here is essentially where you're going to define your feature set. You're going to reach some level of stability, and then eventually your product is going to reach maturity and decline, where you have to implement another strategy for innovating. Also, in a previous video, I went ahead and discussed testing risk over time as a function of risk and a function of cost, and the different types of testing that could be implemented in that particular phase of the product development lifecycle. So, for example, over time, once you reach stability in your product after that growth phase and that maturity phase, your product should reach some sort of level of stability. And then over time, you can reduce your costs of testing. But early on, the percentage and the risk of bugs is extremely high. And that's where you need to implement testing techniques like manual testing, exploratory testing, and really put a high degree of resources up front. If not, later on down the road, you will incur some level of technical debt or some instability when it comes to service delivery. So the big question is, well, what does it look like when we combine those two? And what insights can we get whenever we do? So today, I'm going to go ahead and go over that for you. I went ahead and created this particular chart. Now, this is super important when it comes to first time founders, entrepreneurs, or product managers that are really looking to have some sort of framing whenever it comes to the different phases of their product, especially when it comes to technical decisions. Now, one of the limitations as far as the traditional product development lifecycle, it does a really good job of helping you frame what these different phases are whenever your product enters the market, so you can develop a long-term strategy in order to be able to leverage growth and scalability or put the right resources into making the right decision. But what it fails to do is tie it back to technical risk. Now, in this particular chart, I went ahead and overlaid that particular product development lifecycle as a function of technical risk. Now, as you can see, whenever it does come to launching an initial product here in the inception, let's say you do find some sort of traction, you find that product market fit, your percentage of bugs is going to be higher at that specific time. And understanding that will allow you to be able to implement the right resources, the right teams, in order to be able to overcome that. Now, as time goes on, there is a break even point whenever it comes to scalability. Whenever you do initially launch a product, it's going to be negative ROI because of the development costs. Those should be planned for upfront, but what is often overlooked is the testing budget. Now, this chart allows you to be able to have some sort of framing whenever it does come to planning ahead and planning those technical risks. Now, what happens when you don't align yourself along that? For example, one of the things that we talk about in the startup literature is the ability to go fast, really be able to ship features, ship products as quickly as possible, kind of as a shotgun approach in order to see what fits. Now, if you take that traditional approach whenever it comes to starting your startup or launching a product, you're really going to be moving quickly throughout this phase. If you don't have a solid process for being able to implement some sort of quality assurance or testing procedure in here, when you get to that growth phase, you're going to run the risk of not only incurring a lot of technical debt, you're also can run into scalability issues. For example, if you got the wrong tech stack in place, these issues are going to not only haunt you in the future, but it's also going to cost money and rework. And then, worst case scenario, cost you customers in the long run. So, a few other insights that we can gain from here, as I mentioned, a function of risk over time when it does come to product development. For example, there's very high risk in that inception phase, especially trying to get that product market fit. Now, delivering constant feature sets is a high risk, high reward activity. Now, anchoring yourself into this framework, you can anticipate those challenges early on to make sure that you are allocating the right amount of resources up front. Now, done correctly through that scaling phase, you should be lowering your risk. And as time goes on, once your product reaches stability, you can move more towards automated testing and just maintenance of that specific product. Like I mentioned, failure to do so can result in your product just blowing up in the market. And nobody wants that. Trust me, you want to make sure that you have all of your ducks in a row prior to going to market. Now, how else can this help you? Like I mentioned, being able to manage trade offs. As I alluded to earlier, the traditional product development lifecycle allows you to be able to make those trade-off decisions whenever it comes to your innovation strategy within the market. How to know when to implement the right procedures, right processes, when to scale, how to expect the negative, how to expect when the product is going to reach a positive ROI. And then in this particular phase right here, coming up with another strategy to innovate. Also, it all is very useful once that product does hit the market, really aligning your feature set with customer feedback. Now, one of the things that it doesn't go into is tying it back to the technical risk. Now, this is truly where the innovation here in this specific chart is really taking a holistic look as far as managing that product and the technical risk as a function of risk over time. Being able to overlay it within some sort of anchoring or some sort of framework here allows you to be able to make those trade-offs earlier, trade-off decisions earlier, whether or not you do want to allocate resources upfront, avoid the technical risks upfront, or you just want to run and gun. It really depends on your strategy, but having some sort of anchoring before going to market and scaling your product and understanding the trade-offs and the risks over time is very important. That's where the limitation of the product development lifecycle is that it doesn't tie it back to risk. So as I mentioned upfront, whenever you do start planning your product, your feature set, if you don't have that anchoring and understanding, well, it's very high risk up front because there is a chance that we are going to leak a bug into production. And if that's the case, we may have delayed ships in our code. We may have to go back and interrupt service. It may cost us money in the long term. But to understand that fundamental framing, that risk of bugs is going to decrease over time as the product matures, is super important. So this helps you align that thinking and really understand that break even point. In addition to that, like I mentioned earlier, this really highlights one of the blind spots when it comes to costs. Now, as a first time entrepreneur or starting a technical project or building some piece of software that's going to eventually find market acceptance, a smart startup founder or product manager will allocate for the development budget. They'll understand the amount of hours, the amount of time. So that is going to be baked into the project, how much time and how much money it's going to cost whenever we do start building. Because, like I mentioned before in prior videos, building is the most high risk, cost intensive aspect of anything that you can do whenever it comes to a startup. That's the death valley, essentially. If you build and you build the wrong thing, then it's very difficult to recover it because it's so negative ROI on the left hand side of it. Now, if you plan properly, you get that product market fit, you may fail to account for testing time and the amount of time it takes as far as money goes whenever it comes to testing. Now, this really brings in that blind spot to understand and help you plan through your actual product and come up with a more long-term strategy, and then understand over time your costs are going to go down, but really getting a good gauge on how much money it's going to cost in the upfront portion of taking something to market is super important. And like I mentioned, this chart allows you to be able to visualize that and have some sort of anchoring in order to be able to manage those technical decisions down the road. And that's essentially really what I wanted to explain today, is giving that visualization of tying the product development lifecycle and technical risk as when it comes to testing, and really being able to visualize that, because like I mentioned, that's something that's not implicitly talked about whenever it comes to the product development lifecycle. And this could truly save you a lot of heartache, a lot of heartbreak at the end of the day, because you have this ingrained mental model. You know how to plan properly. You know how to handle things when it comes to that scaling. You avoid rework, you avoid technical debt, and you eventually get to a point where you break even in your product and you start a positive ROI. And then you have some sort of anchoring, knowing whether or not to place your QA resources in a new product, or if you could scale back and invest more in automated testing and regression testing later on down the road. So that's all I got for you guys. Let me know what you think. Put it down in the comments. Is this something that you've already thought about when it comes to your product development process? Have you already incurred this issue where you took on amazing, not amazing, unamazing technical debt, and you were forced to be able to have to rework some product decisions down the road? Did you guys fail? Have you guys overcome this? How can this particular mental model be improved as well? Like I mentioned, let me know in the comments. And that's what we're all about out here in the underground. We're about thinking differently. How can we tie these other aspects of product development, technical management, innovation, to think like nobody's thinking? How can we really change things? Well, that's what we're here for. And keep innovating and keep it real. And I'll catch you guys on the next one. Peace.